Welcome back. Let's talk business. Markets held on the gains through Monday to rise for the second consecutive session. Realty and media sectors were the top gainers in the trade. The Sensex and the Nifty ended at its highest levels in 5 months since mid-December in 2022. The Sensex up there, as you can see, 317 points, 318 points really, at 62,345, while the Nifty rose 84 points to end at 18,398. Neeraj Shah brings you a wrap of all the market action today.
Well, thanks for that. It was an interesting day of trade in that, much contrary to expectations, the markets did well. They ended 0.5% higher. They actually at a point of time were much higher as well, 0.8 or thereabouts. And with positive market breadth, nearly 1:1, but slightly better than 1:1 in favor of the advances. So not a bad day of trade. Bank Nifty did well. Rate sensitives by and large did okay, because I think real estate also dominated the trading session today. So that was actually a positive piece angle to it. Very few losers, even while TCS may have been down, but IT by and large did okay in the session today. So and result reactions were seen in a bunch of stocks on the large cap as well as the broader end of the spectrum. So speaking of gainers, right, or the top movers, you can't take your eyes off from Tata Motors in the session today. Ended about close to 3% higher in trade after very strong numbers, very strong guidance around quarterly flows, etc. So did well. Some IT stocks, Tech Mahindra, Infosys, Wipro, HCL Tech did okay too. And ITC and Hindustan Unilever were in the green. Very few losers. Maruti topping the list and TCS being in the list, but otherwise not too many losers. Even at the broader end of the spectrum, I mean, yes, I mean you had companies like from the Adani Group stocks, for example, in the red, and a few others like Edelweiss, etc. coming off. But the day belonged at the broader end of the spectrum to the gainers. Real estate dominated the pack. DLF results led to that stock being up 6%, the highest that the stock is in the last 14-15 years. But everything else, from a Sobha to a Prestige Estate to Oberoi Realty, very exceptionally well. Mid-cap tech, the likes of Zensar Technologies, which is the top gainer on the BSE 500, did really well for itself. Cyient did really well. SL Propack did well. So it was a day that belonged to the gainers, if you will. And considering that it came in on the back of the Karnataka election verdict, it was a bit of a surprise move as well. Let's see if this continues, or do we succumb to some bit of selling pressure in the course of the week. Back to you.
Well, you mentioned those Karnataka Assembly election results. The results of those recently concluded elections, where the Congress emerged as the big winner, were largely in line with the street's expectations. The markets opened on a positive note, riding the high of the higher FII flows in earnings, and the market had already factored in the BJP's loss in the election verdict, and trading in a wait and watch mode. The Lal Street is anticipating the BJP's future strategy in the upcoming elections of Rajasthan, Chhattisgarh, Madhya Pradesh and Telangana. We spoke with some market experts to assess the impact. Listen in.
This entire elections, all elections for that matter, are being fought on the basis of the freebies offered by one and everybody. And whoever ends up offering maximum freebies, I think that's where probably they end up cornering more votes. And that's something I think which is basically quite disturbing, and it's continuing to be disturbing. Because on one side, the freebies do end up reaching in the hands of people, if at all. I think they are through direct benefit transfer. But if they are not, then probably I think these freebies are lost, and I think a loss to the exchequer. That is an unfortunate part of it. Now, before we go into that part of it, I think the market definitely is mindful of this entire situation. They do believe that in democracy, the freebies are required to be given, and that's where probably some amount of consumption is also attributed to. So to a certain extent, I think the economy progresses because of the freebies, consumption takes place. But on the other side, the market is equally mindful about the distorted balance sheets of the state. When you keep on offering freebies, and it results into higher amount of fiscal indiscipline, which could possibly lead to, I think, a similar situation what we have recently experienced in the global economy, wherein after the pandemic, they ended up distributing freebies, and they have resultant inflation and all the kind of ugly things which have started happening in their economy. So market is extremely concerned about, I think, this particular pattern. And that's where I think one is seeing the nervousness also to a certain extent, I think, in the market, at least reluctance in participation, if not in the fall in the value at this point of time.
The biggest overweight for us is in the industrial sector. based on government spending, which is construction, cap goods, etc., and defense space. That's where we have the biggest overweights. And I think the way government is serious about indigenizing defense production and continue to spend, especially in the election year, on the road building and the infra building, I think we will continue to see maximum visibility in these pockets. That's where our maximum overweight is. The other overweight, of course, is in the private sector financials. Earlier, it was more towards banks, but now we have a good mix of banks and NBFCs. NBFCs, of course, with the peak of interest rate tightening past us, things can get easier for the NBFCs, and they are available at reasonable valuations.
Overall trends on a macro front are turning out to be slightly better than before. For example, globally and particularly for sure in India, we are at the peak of interest rate hike cycle. So we do not expect interest rates to go up much more meaningfully. Rather, they will hang around here or gradually taper off, which is very positive for markets.
True.
Oil prices being where they are, though of course it suggests a kind of a recession globally, but for India in the short term, it's very, very beneficial from inflation perspective. And overall, when the dollar index is also on a slightly receiving end, the other currencies, including rupee, will have a slightly push. So when we put all these factors and we assume that the FI inflows, which were extremely negative last year, and it just started tickling in if they continue, and we couple it with the domestic SIP outlook, which is sustaining, we feel that the market in short term will continue to be in the same trajectory of recovery that it is, but for a correction for a day or two now.
And there's some respite for the Aam Aadmi. India's wholesale inflation has eased in April, fallen to its lowest level since June 2020. And this was led by a decline in inflation across products. Pallavi Nahatha has the details.
India's wholesale inflation turned negative for the first time since July 2020, led by a decline in prices across commodities. Wholesale prices declined by 0.9% in April compared with a price rise of 1.3% in March, according to official data that was published on Monday. On a month-on-month basis, the gauge continued to remain flat. Inflation in manufactured products, that forms the largest component of the index, declined by 2.4%, along with significant easing in fuel and power inflation as well. Meanwhile, retail inflation stood at 4.7% in April as compared with a print of 5.7% in March, according to official data that was published on Friday. This is the lowest print since October 2021. It's also the second straight month that retail inflation has fallen within the central bank's target range of 4 plus or minus 2%, raising the bar for further rate hikes by the central bank.
All right, now in other news and from the business world, Indian pharmaceutical companies are betting on the copycat version of a cancer drug in the US. The drug makers are shoring up their fortunes even as they face price erosion and heightened competition. Monal Sanghvi has the exclusive details.
The fourth quarter saw most Indian drug makers that have announced results exhibit lackluster performance in US. Now, big names like Cipla and Dr. Reddy's are being downgraded by analysts on weak launch pipelines, uncertainty around planned launches and price erosion in the base business. But there's one drug that has proven to be a savior supporting their performance and is expected to do so until January 2026. It is a generic version of Revlimid, a blood cancer drug innovated by Bristol Myers Squibb. Now, when a generic version of a drug is launched in the US, a typical price erosion to the extent of 80% on the price is witnessed in the face of competition. For Revlimid, however, it's a different story. Bristol Myers has entered into volume limited agreements with generic drug makers, regulating the supply in the market, thereby ensuring reduced price erosion in the face of high demand. The drug had a pre-generic market size of around $9 billion. Now, the drug is thereby expected to present a lucrative opportunity till January 2026, post which it will become an open market, which means the volume limited agreements would not exist. IIFL Securities pharma analyst Rahul Jivani estimates that 2023 financial year saw a decline of around 15% in the price of Revlimid. Sun Pharma has been the 5th generic entrant from India and 8th globally in the US. Natco Pharma was the first generic to launch, followed by Dr. Reddy's, Cipla and Zydus Life Sciences from India. Market shares are also expected to take shape in line with the launch dates of these companies, and drug makers seem to be relying heavily on this drug to aid their performance for the next 2 years.
And let's get you some special reports. My colleague Rishabh Bhatnagar comes to you with the economics and state of funeral services, a startup space in India.
Well, yes. Despite decent cash flow and gross margin level profitability, institutional investors have stayed away from the funeral startup service space here in India. We spoke to the number one player, which is Last Journey, the funeral services arm of Ferns and Petals, and number two player, which is Antyeshti Funeral Services, a recent contestant on Shark Tank, to understand why this is the case. Shruti Reddy, the founder of Antyeshti, said that while funeral service is a $1 billion market in India, most investors feel it's not scalable and hence not fundable. Another major issue is marketing, and thirdly, many investors have expressed some sort of a moral or ethical dilemma while saying no. To be clear, Reddy is one of the very few founders in the space that have managed to raise funds. Rishabh Jalan, the CEO of Last Journey, said the space has been difficult to break into, but the industry now stands at somewhere around $3.5 billion. Jalan is also in the market now to raise funds, and he says investors have responded positively so far. Globally, the death-focused startup story is different. According to Traction, there are about 200 death tech companies, and they have managed to raise about $253 million till date.
All right, that's the business news at this hour. We're going to go in for a short break. More on the other side. Stay tuned.